Hi, thanks for joining us on Real Estate Insiders. I'm Danny Poulos with the elite lending team at FENBI. Our guest now is John Borawski. He's the president of Asset Accumulation and Conservation Incorporated, and he's a financial specialist. He's going to give you a little treat today. He's going to tell you all about the ideal investment and all the details of that. So, John, tell us a little bit about yourself, and then we'll get right into it.
Okay, thanks, Danny. Once again, my name is John Borawski, and I've been in the financial services industry for almost 45 years. And I have worked with clients when I was in Los Angeles, where I started, for almost 20 years, and with a partner built a very large practice and decided we were going to open an office in New York City. And I lost the flip of the coin because I went to New York and he stayed in Southern California. And anyway, we were there for about another 10, 15 years, and I came down to Florida to retire about 15 years ago. And
how'd that work out?
It didn't work out well, you know, kind of a sidebar. I wasn't a golfer, I wasn't a boater, but they say about a boat, the best day for a boater is the day you buy a boat, and the second day is best is the day you sell the boat.
So retirement didn't work for you?
No, I did the boat thing both in the same year, you know.
Well, I'm assuming after 45 years, you know exactly what you're going to be talking about.
Right. Okay. So, the ideal investment. This is a vehicle that is really not known by a lot of people, and it has all of the advantages that one would look for in an investment, and candidly none of the disadvantages. It's approved by Congress. It allows for special treatment for taxation. You get stock market returns without being in the stock market, and you have no stock market losses. So that's right, your account can only go up, it can never go down.
Let me write you a check.
Yeah.
That's enough. We're out.
Danny's got a million of them. So there are many, many features to the perfect investment. It has the ability to take the money out of it when you want to take it out, not when the government says you have to take it out. You can borrow the money out of the plan, never pay it back, it's your own money. Just many, many features, and we'll sort of hit.
So what is the vehicle? What's the investment called?
Okay, Danny. It's called Index Universal Life, and it's a specially designed life insurance product, which the emphasis is just the opposite of what you think of when you say, hey, I want $1 million of term insurance. What you're really saying to me is, John, get me the most amount of protection, i.e. $1 million, for the least amount of money.
Right.
Here, with the ideal investment, here we take the deposit of, say, $10,000 that people want to save a year, $15,000, whatever it is, and we buy the least amount of life insurance.
Right.
Okay? And in so doing, we are not allocating a very big percentage at all of the monies for mortality, for the death benefit. We're doing it for the savings aspect. Now, there's a limit, the government says, that you have to have in the death benefit, or it's not a life insurance contract,
right,
and thus you don't get all the benefits of the tax-free withdrawals on the money, et cetera, et cetera.
So, I mean, most people are used to, when you talk about retirement planning, used to a 401k. Mm-hmm. What's wrong with that?
Well, many people don't know that there's differentials that they could have outside of the 401k. The 401k, the problem with them is it's really been a negative in this country, in particular in the last 15 years. Now, why do I say that? And, well, number one, the cost associated with a 401k to manage the money, it's atrocious. It's 3 to 5%. Okay, well, I call the 2000 to 2010 the lost decade, right, in the stock market. So 401ks lost in that 10-year period of time 45% of their principal, okay, in that period of time.
Sure.
And it's a funny thing, but if you're charging 3 to 5%, you're charging it whether the market is up or down or your account, etc. They're charging it. So people lost a tremendous amount of money. So if you can put your money away, like in the ideal investment that I'm talking about, where it accumulates tax-free, when you take your money out, it's tax-free, and you have a death benefit that's tax-free, it has all of the advantage over the 401k plans.
Now let's talk about the biggest advantage, as you explained to me, and those are the caps. Explain how that works.
Okay. Well, the caps are a function of how do you calculate what you earn in your account. Okay, so the way there are maybe 15 to 20 life insurance companies who have this type of product, and they differ a little bit. But a cap is your account is linked in terms of how much you make to the S&P 500. So you could earn up to 13.5% of whatever the S&P earns. Earns 20, you get 13.5. Earns 8, you get 8. But the big number is if it loses 10, 15, 30%, your account stays at where it was the year before.
And it's not like we haven't seen that happen in the last 10 years.
I mean, we had some people in '08 that lost, the market went down 38.5%. And
right when they were getting ready to retire and rely on all that.
Exactly. And that's a good point, Danny. So people could have been a year away from retirement, their 401k, they might have had $1 million in their account, or they thought, and ended up with 600,000. Now some of those people are still working. Right,
so in plain English for somebody like me, all I would know is I can't earn more than 13%.
Right.
I can't ever lose anything.
Right.
Right? I can't go below zero. The only time that I'm short is if the market goes up 20%, I still get 13%. And when it goes down 30%, I don't lose a dime.
Right.
Right? Am I getting that right?
That's right. And you do not pay taxes on the money when you take it out, as opposed to the stock market. Okay, it's a big difference. Let me just regress to the 401ks for a second.
Go ahead.
I tell anybody that I meet, I was with an attorney the other day, I was referred to at a big law firm in West Palm Beach, and he says, well, geez, you know, they put a lot of money in our company in the 401k. And I said, but are you making any money? Is that what they put in? Are you making any money?
Right.
He said, well, we didn't for the last 12 years. So I said, well, do they have matching? Do they match your contribution? Yeah, up to 3%. So I tell everybody, that's like found money. Why would you not do that?
Sure.
Okay, because they're putting in 3, you're putting in 3. But over the match, I think you're wasting your money.
Right. So yeah, we don't want to just dismiss the 401k because the matching contribution is a big deal.
Right.
And I don't want to leave without this favorite phrase I heard you say, zero is my hero.
Right.
I mean, that's something you really have to keep in mind here, right?
Yeah, I told Danny, I got that zero is my hero phrase from a woman, very dour type of woman, and she went into the program with me, about 62 years old, and so anyway, the first year she did earn 13%. So I have everybody come in every year on anniversary and review, but she wasn't too happy. I don't know what she wasn't happy about, but she wasn't happy. So the second year, when the market went way down, her account was zero. She didn't lose anything. Right. So she came in and she brought me a box of cookies that she baked. And I said to myself, why would she get cookies? She didn't make any money. And she said, no, you don't understand. She said, I didn't lose anything. So zero is my hero. And all my girlfriends that I play cards with, they're still in the market. And they lost 30, 40%. And I said, that's where I got the phrase zero is my hero.
I love it.
So
now, the other main benefit was that the income you take out is tax-free.
Yeah.
Right? At the end of the day.
Yeah.
It's got a benefit. Mm-hmm. And I know one thing that's going to be on people's minds when they think of, oh, I'm getting this income, but I'm retired. How is that all going to affect their Social Security payments?
Okay. Let me answer that question. Let me go back to the income tax rate.
Go ahead.
Because you mentioned the cap. The income tax free is why people do this.
Right.
Okay. So, but let me do the income tax rate first. To make more sense out of Social Security. So when I sit down with someone, I know Danny's a young 48, but I met a guy, you don't know where you're going to meet guys. The guy cut a tree down in my yard on Saturday, an 80-foot tree, and we talked, and we had some things in common, and he asked me what I did, and he said, you know, I've got some money, I just don't know where to put it. I'm not putting it in a stock market. I can't afford to put it in a stock market. So I'm making about 0.5% at the bank. And so I gave him some of the things we're doing right now in terms of the features. He couldn't believe it. And so he said, well, how do you decide how much people invest? I said, well, it's really more based on, first of all, how much you think you could put away every year. Right. But secondly, your objective is how much income. How much income do you want to get out of this? Because it's tax-free income. And you can't, when the guy's got things over his ears like this and he's cutting a tree down, you can't get a whole lot. So, any event.
Everyone likes the sound of that now.
Yeah. So any event, we sat down and he came up with a number that he wanted $4,000 a month when he retired. And so it has a lot to do with it, because if you get $3,000 or $4,000 a month tax-free, think about it, that's like you'd have to get $7,000
Right.
taxable.
Right.
There's a big, big difference. As it relates to Social Security, if you get income, and some of you retired people know this, if you get investment income, pension income, whatever the case may be, that goes on your return. And then the accountant then takes it as an offset against your Social Security payment. So your Social Security payment goes down, okay, it's because you're going to pay tax on more of it. With this income here, none of it affects your Social Security. You get 100% of your...
So whatever your Social Security benefit is,
Right.
unchanged.
Unchanged, right.
This is all on top of it, so you don't have to worry about, oh, am I making too much, or my Social Security is going to go down.
Right.
You get all of it.
Right.
And you're getting that income out
Right.
tax-free, as you said. And but back to that 401k, I know the other thing you were explaining to me is that the government's really telling you how you can take it out, when you have to take it out, what it's going to cost you. This sort of in control of your retirement income, right?
Exactly.
Is that right?
Exactly. I mean, if you're 55, you could take the money out under certain type of provisions, but 1 out of 10 people qualify to take some of their 401k. Otherwise, you're going to pay a 10% tax, penalty tax, and the income tax if you draw it out before 59 and a half.
Right.
So then on the other side, it's mandated, you have to take it out at 70 and a half
Right.
and pay the tax, et cetera, et cetera.
The point of this investment is really under your control. In fact, as it builds up, you could use it as your own bank too.
Exactly.
You can borrow against it. So
Yep.
it really puts you in control of all your finances rather than leaving it to your employee and the government and everybody else on top of all the benefits that you're talking about, right?
Right.
Anyone can do this?
Yeah, that's a good question, Danny. Anyone can do it. Age group is probably 35 to 60, something of that nature, because you need about 10 years for the money to grow, and to make it, take it out, and so on and so forth.
I guess the earlier you start, the better off you're going to be no matter what,
Yeah,
right?
If you look at the numbers, if someone is 35 years old, puts in 10,000,
Right.
it's mind-boggling.
I mean, I can't imagine that someone would want to learn more about this. John, please tell everybody how they can reach you with
Sure.
any questions they might have.
Sure. Again, my name is John Borawski, Asset Accumulation. I'm in Palm Beach Gardens. It's 561-596-7189, and I'll be happy to answer any and all of your questions.
That's awesome. I think it's something that everybody should be looking into. Thanks for coming today.